Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, January 8th, Wednesday. We've got a relatively healthy labor market, evidenced by the latest figures of the US initial jobless claims. We see that the actual value is below the previous one, but still lower than expected, indicating a healthy labor market. So less jobless claims, coupled with the fact that we have continuing jobless claims almost at the same value, neutral, we have labor market conditions that support strength. Now, we have US wholesales also surprised to the upside with a month-over-month increase of 0.6%, indicating a stronger than expected economic activity. Now, however, there are reasons for caution. US Treasury Secretary Yellen has expressed concerns about the limited progress on inflation over the past couple of months. Additionally, Fed's Waller pointed out that geopolitical conflicts and potential tariffs could renew price pressures, a sentiment that creates a lot of market uncertainty. On top of that, we saw the average 30-year mortgage rate climb to 6.99, almost again back up to 7%, which basically is dampening housing market activity. So finally, the ADP employment change came in way lower than expected, suggesting a possible slowdown in job growth. So looking at the broader market, the Nasdaq, the S&P, and don't forget about the Russell 2000, all are experiencing a push and pull on these competing narratives. While the positive economic signals and the Fed's indication that they are open to future rate cuts in 2025 if inflation progresses could provide some support to stocks, there are basic concerns about renewed inflation pressures due to potential tariffs and geopolitical issues, which all create a lot of uncertainty. Due to that, I'm basically pointing out a 55 sentiment analysis on a neutral side, so we have to really rely on the price action. And the price action is not helping us. We are still in the framework. This is the 1 hour chart. We are still in the framework of this inverse fair value gap, which is holding bearish. And also, we have this low that got bought, but this overnight, it's pressuring to the downside. If we go to the daily, we are continually seeing a series of lower highs and most probably lower lows. And I still think that we are going to see 20,000 more or less. And then at this zone of 20,000, I think there will be a lot of investors buying this dip. Until then, we are seeing a tug of war. We are seeing a lot of people trying to buy, a lot of people trying to sell. And in terms of sectors, we are seeing banks in the red. XLF, it's barely flat, but it's pulling back, and we are right there with the 45 DMA and the 20 DMA right there. We have utilities in the negative. We have semiconductors deeply in the red, minus 1%. AMD is 4.66% in the red. And also, don't forget about small caps. 1% in the red for the IWM, the Russell 2000, and the RSP is just flat for days after day after day. So we have to continue exercising patience. The 1 hour chart still shows bearish signatures. There were this 1 hour that got respected. There were this another 1 hour. All these fair value gaps, bearish, are holding tight. And on the 1 minute chart, we are seeing, look at this. This is chop fest. This is a chop fest. So the narrative 15-minute chart is just basically nothing. So People is assessing the future. People is waiting for Trump to enter the government. Oh, quite a push. But still, don't blindly follow these candles. We have to really see in the higher time frames how things develop. And right now, I'm not seeing anything bullish. We have Trump waiting to enter the White House. We have big political events coming up. So, my recommendation is really to wait for those, to really have clear signatures on the bullish side, and then we can proceed to really support this market. But until then, I don't think this is a market I would like to buy. Maybe for the long term, but as a day trader, I don't like this. That's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel because I upload videos like this one every single day. For market forecasts, market updates, and market recaps, I appreciate your time as always. The trading day is not over yet. We are seeing people trying to buy this red knife, but I don't trust it. So, from my side, there will be more patience, more discipline, and more risk. Stay safe, everyone, and see you tomorrow.